Hey everyone, today is Monday, November 2nd, 2020. Let's take a look at the market. So tomorrow is the election day, and I expect the market to, after the election, I think the market might drop first and we bounce back, or maybe we even have a nice rally after election. We'll see how that goes. The market doesn't really repeat all the time. History doesn't repeat, right? The last time, so we need to take a look, consider several factors, how the market would react or how the market could perform after election, based on where the market comes from and where it's probably gonna go, right? So let's take a look at the 2016 election here. Just wanted to guys just see here. 2016, the market was pretty much flat since April 2015, right? April to July 2015. So if we look at this, you can see that between April 2015 to November 2016, that's almost 2 years. The market barely moved, and it basically had a lot of volatility, and the market was able to break above this level, this key level of resistance, and it retests that level twice, and on the election night it actually retested 3 times. Then it actually then the market took off after the market risk has been gone. The president has been selected. Trump is now in power. That means no more risk going forward, and the market took off completely after that, and that is a brand new trend to the upside. You can see that it lasted for about lasted until January 2018. There was a huge correction here, so it lasted until a year, more than a year after that, right? So when you are back in the day, I was actually long in the market after the election, so that was a nice gain. Unfortunately, I sold out, after this level, I think, and I never really held on to this or even went through this level. I actually re-entered. I remember was kind of here, then I sold too early here, but I was kind of glad I escaped from this fall just by sheer luck, actually. And okay, that was what happened to me. But if we look at what the market came from during that election, the market was consolidating through time, right? The market had a lot of time accumulating energy, accumulating buyers, and people buying the market. The shares is falling into stronger hands, and then eventually the market has enough energy to take off. But what we're looking at here today is a completely different story. First of all, last video I talked about the dead cat bounce. This is exactly what happened. You can see the market continue to drift down lower. That day, October 29th, when I made the video, I talked about, the futures basically reverse is the level, and tomorrow is going to be another ugly day. That's exactly what happened, by the way. So let me just remove that. So the market is actually entering a downtrend. So now we had an election right here, right? We had an election right here. Obviously, this deleveraging here is due to, obviously, people are concerned about the election. People are concerned about the potential unrest that coming after election, right? If we have, let's say Joe Biden wins and Trump refused to have a proper transition, or there might be some dispute with how we count the votes and all that stuff, this thing could drag on. The uncertainty could drag on even after election for almost a month or even 2 months, right? And we could have civil unrest in the United States. We could have all sorts of things. And most importantly, it's not a civil unrest, all that stuff, right? That's important. That's going to affect the market, right? Think about back here, we had a civil unrest. We have the George Floyd, all that events, but the market just keeps ripping upwards. What's really going to affect the market is that the power transition, the delay of power transition is for sure, that's going to delay the next stimulus bill, right? So if the next stimulus bill doesn't come in January next year or February next year, if that is expected to be delayed, then the market is going to have a reaction to the downside, right? Because the longer we delay the bill, at the same time we have the COVID is coming back, we have a second wave. That means the market could have a liquidity issue. Then it could drifting down to the downside. So this is one of the scenario we could be facing. Drifting down and eventually to a lower level. And this slow grind down, or this really up and down gyration is going to shake a lot of people out. And it's going to be very uncomfortable to even hold a position in this scenario. Because like this, right? Like this one, it takes how many months to really bottom? It takes, this is 2 months. So for this one, we're being, if you have bought here, you're still losing money. So this gyration could last for maybe 200 days, 100 days. It's gonna wear a lot of people out. Okay, and that has happened in history before. We can take a look at this one, for example, here. This one, it lasts 146 days. You can see that this could be a potential scenario where we keep drifting down, we keep have a high volatility and going downwards, and eventually we bottom. And we could have that scenario, right? We could have this thing happening here as well. If we don't have a smooth transition of power, or we don't have Trump is being voted into the office again, we don't have a smooth transition power. If Biden wins, I expect this is probably a very likely scenario where we just keep drifting down. Not a good time to hold. Not gonna be very pleasant to long-term holders for sure. And to really put this into perspective, let's take a look at maybe this thing in a long-term perspective, how the market could move. One thing you can notice is that we have this kind of trend line here, right? Obviously, we have this particular trend line here. That is a long-term trend line, and if you have been, this simple line, it's just like simple market trajectory. And you can see that coincidentally, it seems that market basically kind of touched this line and always bounced back for the last 2 times, right? And there's also another line that you have to be aware of is this one, right? This particular one. This is also a line. You can see that the market basically, I basically drew from here. I don't have to look at the future data. If you drew from here, I'm not peaking. You can see that coincidentally, it basically touched the tip here. And then now we were able to break out of that slope. And we are basically right here. So these are 2 things I'm looking at, and I don't know if we touch this line, we're gonna bounce back and keep gyrating upwards. We're going to break down to the downside. It's really hard to tell. Okay. The bearish scenario I really want you guys to focus on is that we had this kind of a volatility going on, and the second wave was not able to make a new high. So that means it got shut down right here. And one thing we could really refer to is the 2007 and 2008, right? You can see that here, 2007, 2008. If you are trading here, you're probably taking a look at this. You can see that we're in a long-term trend here. And eventually it kind of break to the upside and came down, tested this level, came up again, had a huge rally. You can see that here. So imagine you're trading here. So I'm gonna put this in replay. Well, it seems I can't put this on replay. That's fine. And you can see that you're trading here, and eventually, then we had a breakdown because the price was too vertical, I guess. Then we had a breakdown. To October 2017, November 2007. I think there was some news out there was regarding to Bear Stearns actually went bankrupt. I think that's when the market had a reaction back then. Then we had a bounce here, right? And then it failed to make a new high actually. Then it just came down. It just drifts down, 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 and eventually it kind of found a support in the previous level, like in this level, right here. So we could have, that's what I'm looking for. If we broke down from this particular trend line here, which is this trend line is equivalent to our this long-term trend line right here, right? If we broke down from here, if we came down, if we break down, and I think we're going to come down quite significantly, and maybe we are going to retest a certain level. Which level is going to be the previous peak, right, before this dip. So the previous peak before a major dip would be this, right? So we're probably going to retest the previous top here, and I think the price, if the price comes down, eventually that does like this, and we maybe break down a little bit, retest this level, regain strength, and we could revert our reverse and maybe make a move to the upside again. But that's hard to say, right? So that is something I'm looking for right now. From now to next January. So if we do breakdown, it's probably going to end up like this. Other than that, I don't really see if there's also another scenario. There's also another scenario that's more bullish. More bullish would be we break down. We came up right away after election. So after election, we had a very strong bounce. We make a new high. Then we're probably just going to keep going upwards. And that is, so if after the election we have, so it is very crucial to look at the market, what's going to happen after election, right? If the after election we break down to the lower end of this trend line and we bounce a little bit, not able to get back up, keep breaking down, then we're probably going to end up like this. From here to next January or February is going to be a shakeout, just like this one. If not, if we do have a strong reaction from election, like the risk is gone, the market's happy, maybe Trump got elected, we're going to have a new stimulus coming in like a month, then the market could react very differently, right? The market could just bounce right off, make a new high, all-time high, and then continue to gyrate going upwards. So that's really depends on the monetary policy and how the overall economy, and especially important thing is that do we get another stimulus plan, right? Do we get another stimulus? Do we have more? Is there going to be more money that's going to be pumping into the market? That's very important, right? That's what the market is. The market is just pile of money, right? It's a digital kind of it's a digital space where you pour money in, right? The more money is in the market, the higher the market goes. That's how it works. And liquidity, absolutely very important factor for the market. And that is why have a continuous stimulus, have a very low interest rate environment, low inflation rate environment is absolutely critical for the market to continue going upward at this current valuation level. Okay, that's all I want to talk about today, and see you next time.